Is it a breakthrough in the making, or just the first chapter of a very expensive experiment? In February 2026, reports indicate that former U.S. President Donald Trump has explored the idea of a private sector-led reconstruction framework for Gaza. It has been informally described as a board of peace, the figure being discussed, an initial $5 billion. Supporters frame it as seed capital. Critics argue even $5 billion barely scratches the surface of full reconstruction costs. The capital question. If implemented, this would reportedly be structured as phased investment, not a one-time check. And that distinction matters strategically. A single modern desalination facility can cost billions. A secure, deep-water port could consume much of the remaining capital. In other words, $5 billion would likely fund only Phase 1 infrastructure, not a full transformation. The real estate analogy sounds powerful, but this is closer to laying foundations than unveiling skyscrapers. The governance problem. Here lies the most delicate question. Who signs the checks? Gaza is administered internally by Hamas, while the internationally recognized Palestinian Authority operates from the West Bank. Investors, particularly from Saudi Arabia, the United Arab Emirates, or Qatar, are highly unlikely to transfer capital to a militant-controlled authority. No investor wants political liability. No political faction wants to surrender authority. Until that equation is solved, capital remains theoretical. And without governance clarity, private capital does not deploy. Security, the regional reluctance. Security is not just a technical issue. It's a regional minefield. Reports suggest an Arab-backed security mechanism. But there's a problem. Regional capitals like Egypt and Jordan have shown deep reluctance to deploy boots on the ground. They are wary of being drawn into a prolonged conflict or political quagmire. While the plan may envision regional security participation, key Arab states remain hesitant to be caught in the middle of an open-ended security burden. And without credible security oversight, major investors are unlikely to move forward. Strategic calculations. For Israeli Prime Minister Benjamin Netanyahu, the calculus is complex. A stabilized Gaza could reduce immediate military friction. But independent maritime access raises long-standing security concerns, particularly regarding weapons smuggling. Supporters argue that economic stabilization could reduce long-term security pressures. Critics counter that infrastructure without strict oversight risks unintended consequences. Meanwhile, Iran would likely view a Gulf-backed economic stabilization effort as a shift in regional influence dynamics. That doesn't mean influence disappears. It simply evolves. The investment gap. The spreadsheets tell a sobering story. Recent joint assessments estimate the total reconstruction needs at approximately $70 billion over a 10-year horizon. This figure is projected in 2026 constant dollars. Meaning, the initial $5 billion catalyst capital is heavily front-loaded. But the gap remains. $5 billion can start the engines. But without long-term commitments, the project risks stalled infrastructure. The NCAG. To solve the governance deadlock, the plan introduces the NCAG. Formed in early 2026, it is a council of Palestinian technocrats. While its apolitical nature avoids friction, the framework faces a massive constraint. Gaza lacks the middle-tier bureaucratic machinery, the auditors, the procurement officers. Without this human infrastructure, the capital risks being lost to inefficiency. The international stabilization force. Security is the prerequisite for capital. The plan envisions an international stabilization force, but its authorization faces a high probability of a veto within a divided UN Security Council. Doctrinally, the UNSC has the power to act. But will participating nations demand a clear legal invitation to ensure the force is seen as a stabilizer and not an occupier? Logistics. Reconstruction is a battle against physics. Gaza is currently buried under an estimated 40 million tons of rubble. Clearing it is a decade-long project. Before the first skyscraper can even be sketched. Without a dedicated maritime pier and an expanded Rafah gate, the $5 billion sits idle in a bank, unable to cross the border. the digital panopticon. In 2026, the proposal markets Gaza as a smart reconstruction zone. But while AI surveillance offers risk mitigation for investors, it creates a state of digital extraterritoriality. In the absence of data laws, biometric data may be stored on foreign servers. This creates a legal vacuum. Residents have no power over their own data. The Saudi-UAE paradox. The Gulf states are the expected financiers, but their money comes with a non-negotiable condition: a credible path to statehood. They aren't just looking for a return. They are looking for a political resolution. If this is seen as a way to delay self-determination, the Gulf's sovereign wealth may never leave the vault. The Iran factor. Instability is a weapon. The axis of resistance views a Gulf-backed Gaza as a strategic threat. A single well-placed attack on a reconstruction site could send international contractors packing. The Board of Peace must not only build a city, but also defend a narrative. Gaza Marine. The Gaza marine gas fields are the framework's energy anchor. However, extraction is trapped. The PAS legal claims. Israel's security control. Egypt's logistics. Until a tripartite agreement provides clarity, the gas remains a stranded asset that cannot be leveraged for financing. Employment versus radicalization. With unemployment exceeding 50%, the $5 billion is a social tool. The plan aims to convert a generation of resistance fighters into a workforce of rebuilders. If Phase 1 can create 100,000 local jobs, it might drain the pool for radicalization. But if the contracts go to foreign firms, local resentment will only deepen. Part the Abraham Accords 2.0. This is the ultimate evolution of the Abraham Accords. It treats Gaza not as a holy site or a battlefield, but as a distressed asset that needs a turnaround. It's a gamble that economic normalization can eventually pave the way for political peace. Transparency and the blockchain filter. Where billions flow, corruption follows. The Board of Peace is rumored to be utilizing blockchain-based tracking for all funds to ensure not a single dollar is siphoned off. In the Middle East, trust is the hardest currency to mint, and transparency is the only way to earn it. The domestic U.S. political stake. For the Trump administration, this is America First diplomacy. If the private sector can solve a crisis that has cost U.S. taxpayers billions, it is a massive political win. But the question remains, if the board fails, does the U.S. military become the bailout of last resort? The Singapore fallacy. The vision of a Singapore of the Levant ignores one core truth: state capacity. Beyond a credit rating, Singapore had a predictable legal system, an independent judiciary. Gaza currently faces significant constraints. Economic growth is not just about money. It is the product of a predictable legal environment. The verdict? Breakthrough or mirage? $5 billion can buy concrete, but it cannot buy legitimacy. The Board of Peace is a transaction-based approach to a soul-based conflict. If it succeeds, it rewrites the rules of global diplomacy. If it fails, it becomes a multi-billion-dollar monument to hubris. The bylaws, a corporate constitution. The board will operate as a special administrative zone, a corporate government. The bylaws include veto power on all infrastructure to ensure zero tunnel risk. This is peace via spreadsheet, an attempt to replace political passion with fiscal discipline. The Day Zero operational plan. Before the first crane moves, Day Zero focuses on civilian stabilization. The framework allocates $500 million for cash-for-work programs, paying 50,000 Gazans to clear their own streets. It's a race. Can the board provide a paycheck faster than a militia can provide a purpose? The energy anchor. Gaza's future is dark without a power grid. The strategy is two-pronged: massive solar farms funded by UAE capital, and a direct link from the Gaza marine field. Energy independence is the anchor. It stops Gaza from being a burden and starts its life as an industrial hub. Significant investment is earmarked for specialized economic schools, coding boot camps, engineering workshops. If the board can turn 10,000 youths into remote software developers, they create an economy that doesn't rely on physical borders or checkpoints. The deep-water port uses a third-party hub model. All goods destined for Gaza are inspected at a neutral port, like Cyprus. Once sealed, they go directly to the Gaza pier, bypassing the friction of land borders. The buffer zone reimagined. The board no man's land as an industrial peace park. This is the codependency model. If the factory stops, both sides lose money. It is a cynical but effective way to ensure violence remains unprofitable. The plan proposes moving residents into permanent urban housing with property titles. But a question remains. Granting an apartment title does not automatically dissolve a 75-year-old international legal status. Can economic comfort erase political identity? Consumerist diplomacy. The board intends to win mindshare. They want the Gaza dream of prosperity to become more attractive than the Gaza struggle. It's a gamble on the human desire for a better life over historical grievances. The snapback clause freezes funding if violence exceeds a specific threshold. This is meant to deter militancy, but it creates an uncertainty premium. If the freeze is unpredictable, private capital stays away. Worse, it offers a spoiler's veto to any rogue actor. Ultimately, the Board of Peace is a gamble. Can economic solvency substitute for a political settlement? History shows that wealth without legitimacy is a high-tech mirage. The cranes may be ready, but peace is not a transaction. It is a settlement. So what are we really looking at? An initial investment phase, not a finished skyline. A diplomatic experiment, not a guaranteed peace deal. $5 billion can begin reconstruction, but it cannot resolve decades of mistrust. The proposal attempts to reframe the conversation from aid to investment. Peace is not just about cranes and contracts. It's about legitimacy, security, and trust. And those are far harder to finance than infrastructure. If you want to see more informative videos like this, make sure to subscribe to the channel and hit the bell icon.